Hey guys, this is John from the 2018 30K Challenge. Here with Build Your Money IQ. Hey, I want to go over this open gap strategy on the SPY today. I didn't make this trade. I was thinking about it, but I was getting off work, couldn't do it. Um, but a lot of the detail information, you can go to this open gap fill Netflix video that I did. It talks a lot about, the lines that I drew and how to draw them and things like that. And so I'll skip all that detail and then we'll get into the setup on the SPY trade today. So if we go back to the SPY, here's a SPY today. Let's just go back here. We'll go to this spot right here. So the yellow line here represents the high of Friday. This is the low of Friday, and this is how I get my open gap line here. Here is red to green. So basically, when I draw the open gap, this 40% line, I click here, and come all the way down to red to green, which actually should be right here. I don't know why. Let's go to the 5-minute chart. See what's going on here. This red to green line should be here. So let me readjust this line to make sure I got it in the right spot here. So this is a Fibonacci extension, a special open gap one. I go to the bottom, to the top, and back down to red to green. So I know this is my 40% line right here. Okay, that's the real 40% line. Okay. And so basically, I know I would like to try to trade this back short to the at least the 291.15 level, because if it hits this level, it's going to fill the gap, because the gap is it opened here and it could fill the gap all the way down to this line 291.28. So if I get short here, 292.35, that's a 1-point move, real tight stop. You could do that, but this looked pretty strong right out of the gate, so I probably would not have done that. You can see a pretty big wick here, so this could be a spot to take it short. Now you might say, well, how do you know to take a short there? How do you know that it's not going to go up even higher than that? Well, one, it's pretty close to this this one line, which is well, that's high of day, right? And then you got the whole dollar, which is only 7 cents away here, okay? And then if your target is 291.15, you're now looking at let's say this is 293. You're looking at a 2-point move here from here to here, and your stop is above 293. And if you want, we can go back. Let's go back to the ATR. I didn't even look at this, but the ATR on the SPY is, what is it? It's $1.93. Oh, look at that, baby. That should just be music to your ears. So if you think about it, let's get rid of that. If we know the average true range is like $2, so let's go profit targets and let's just draw. The high is 293.09. Let's go to 291.09. If I can get down there. And there's your 2-point profit window right there. Okay. So if you want to do that, we could actually go to red to green here like this, yesterday's low, okay, and or last Friday's low, and then there's your 2 point move right there. So, this is your ATR. It's the average range of the SPY. So if this has moved up $2 or a little bit over $2 from the red to green line the other day, it's a good chance, it can come back down here. Um, you could also maybe move it up to this line, the high of the day before, and that gets up above to this other previous day high. But there's some reasons to potentially look for a position short here. Okay, so let's erase that. So that's the ATR. So that's a good indicator as well. The other indicator that I would want to use would be the MACD. MACD, if you look right here, crosses here and it begins to flatten out and go down here. So this is an indicator that my friend's been begging me to use or start to use more often. And so I'm trying to do this. I'm not going to do this on the 1 minute chart because it's too fast. And it's going to take a while for it to hit. I want it to get up here and then come all the way back down to, come back down $2. Um, so this is a type of reversal signal right here. This it's almost like a gravestone doji. Not perfectly, but sort of like that. And then it begins to get weak here. And if you look at the 1 minute chart, the 1 minute MACD crosses over. But as you can see, the 5 minute MACD, it's still wide open and it's still going higher. So I think this is going to be a retracement back here, find support and go higher. But having the 1 minute, we'll go to the 1 minute chart real quick here, and let's go to I think that time was 10:15, I believe. So if you look at the 1 minute MACD right here, it begins to cross down right here pretty good, flattens out, and then it crosses down here. So on the 1 minute, it definitely crosses and goes down for a bit. So you could have made 292.80, maybe from right here, get in here, your stop is here, 30 cents, 20 cents or something like that, but we're not looking for that. So this could actually be what maybe like an indicator that we're beginning to slow down this upward movement here, the first break of the 1 minute. So getting back to the 5 minute MACD, what I would be looking at is, after it comes up, and this is actually a nice wick with a nice, and this could actually be even an engulfing, this is an engulfing bearish candle, okay? So this red candle engulfs this whole green candle here, and if you look at this huge wick, that shows you also a good sign of weakness as well, okay? So if we're going to use that, um, as a sign of weakness, then we can start building our, I guess, our trade going back down. Now, if you want to have some guts and you can take it there, you could, you know, um, and or at least start a position there if you think that's a good spot to start. Know that you're going to come down here, hit VWAP, and it's going to come down, give some support for a bit, and then flush back down here. So at this point, when this thing starts flattening out here, this is where you got to go for it. When this thing starts flattening out, coming down, and then it crosses through here. On this one, it crosses. This is sort of a confirmation that it's going down. I think on a 5 minute chart, this is, getting weak. It could find strength and go up, but we need to find a spot somewhere up here to get a trade off, okay? Probably somewhere up here, okay? All right, and you're a little bit risky down here to try to get the trade off, you know, because you know it's going to find support here and you're going to go negative. So one thing you can do is draw a 50% line. A lot of times I'll draw a 50% line on this one candle here. This one candle right here. Because this is the weak candle. This is the confirmation candle right here. Okay. And as it rejects here nicely, this trend line right here, right? We want to obey this. And it's not going to get up here. So maybe we can redraw this 50% line using this low right here, maybe this low right here as a possible area to get short in. Okay. So now let's look at the 1 minute chart here. These are things that I'm adding a couple things in here that I didn't use before that I'm beginning to use a lot more. So what we have is a confirmation to go short on the MACD on the 5 minute chart. Okay, and we got that established. Probably 1, 2, 3, 4, 5. We got it established as confirmation on the MACD that's going down from here. Okay. Then what we're going to try to do is find a low risk entry to get in to where our stop is going to be at the high of day. So we only want to risk maybe 20 cents at the most. So if the high, let's say our stop is above 293, or you can go 290, our entry price, if we only want to risk 20 cents, has got to be either on the 80 level here, okay, or 20 cents from here, which would be 73. So that's where your entry price, you sort of want your entry price to be, okay? So here's a trend line here. I want to draw another trend line here and connect this one right here. Is that the one I connected? No, I don't think that's the one I connected. I'm sorry. Let's back up here a little bit. Let me back up here. Jump. Let's jump to this one. Ooh, sorry about that, guys. That was probably pretty loud. Let me eliminate this window so that doesn't happen again. All right, so the 1 minute chart has come down. We may not have been able to get into a trade here. This 1 minute 100, I know we're going to get support here, so it's going to push this back up. Okay, it's going to come down, good trade, you can take some profit, scalp it if you want, whatever. I want to make it all the way down to here is where I'm shooting for, okay? Once it gets down here, I want to draw some, what I'm looking to do, I want to find an X. So I want to get another trend line I can draw. There's that one right there. You know, because this is the low. The reason I'm picking this candle is because this is the low before it came back up. It's around the 100. So, and then I want to draw, I'm going to use this candle right here because that's a low before it goes back up. Okay. So, to me, this is right here, right through here is the most significant part right here of the whole trade. You can get in here a little bit, add whatever. You gotta anticipate support through here. Maybe VWAP is around here too. But this X right here is the most significant part, okay? We want to try to get short, ultimately, obviously we want to get, maybe try to take a short, down this line here like that, but we also want to take a short coming up here as well in the final retest, before it goes all the way back down. Now, if it, ultimately goes up here, price action goes up here, we're out. We're stopped out. But this X here is super, super, super important. So let's play this forward and you see how this is. So, we're doing the open gap strategy to go back down to the lows. We have a 5-minute MACD confirmation. We have good candles that represent showing weakness here on the 5-minute chart and on the 1-minute chart. We do have, a lot of people might think we got in too late here. But what's going to happen here is that as it begins to reject these levels here, it's definitely going down, and you can actually lower your stop. If this is really going to go for you, your stop price can be around here. Okay, right around there maybe. So if it's 292.78, you go 292.80, which is a good number. 80 is a very important number. And if your entry is somewhere, between, let's say if you go here, okay, so anywhere in between here should be your entry. Okay, see that? All right, so actually, something, I'm going to take off this alert and we'll just watch the price action here. And watch how well it respects these lines and these lines as we go through here. Actually, I just exit out. Just exit out there. And then we'll go to 10:15. And there you go. So it comes up here, it respects this trend line, comes down. I think it finds support here. I think there's VWAP. Well, there's pre-market high here. It finds support. And then it comes all the way back up here, sort of close to this upper trend line. But like I said, our stop is 292.80, or if you want to go, if you feel really good, you can bring your stop all the way down to 292.75, which would be the high of this doji, before you get the big sell-off here. Okay, that's a legitimate stop as well. And it gives us last spike up. Nice big wick there, a doji back below the 50% line that we drew. Comes down, hits VWAP. One more time goes up. It doesn't get just up there, and then it begins to fail again. So, and after that, it's over. After that, it definitely, people are trying to push it up. Bulls are trying to push it up. You had a nice failable low here, and then once you get this crack right here, once you get this big wick, it's sort of done. You had a big volume bar here, sort of a big one. This one, okay, and from that point, if you can see this trend line, look at this trend line. Does this not follow this trend line right on down now? Okay, yeah, it comes down here, it breaks the trend line. I mean, but it's gonna break the trend line. I mean, you've already profited 292 to 291, almost $1 here. And, you're going to have to expect some profit taking, some consolidation here. And then later on continues to fall down a little bit more. And, by this time you're so profitable, you're way below VWAP. You're lowering, your entry prices, let's say up here, you should be moving your stop down, significantly, you know, uh, on this break, your stop price should be, above the pre-market high. On this break, here, your stop should be above there, right? So you're way profitable. And ultimately, we do hit the 40% gap fill. So this has a 50% chance of filling the gap, okay? Even though, on the 5-minute chart, um, what a mess this is here. Let me erase these things here. Let's see here. So, what was I saying here? I was saying that in the beginning, we had a chance, you have a 50% chance on something that gaps up over 40% of the previous day's move. You have a 50% chance that day, sometime during that day, it's going to retrace all the way back down and fill this gap in one day. Okay. And we're just, once again, we're looking for the opportunity to do that. And we found it here at the crossing of the MACD. It took a while before, you had the bears, had enough, strength to take over, and the bulls just sort of gave up. And you just sort of saw what happened. You saw how I draw the trend lines, how we found the X, and how to trade that. So, I hope that makes sense to you guys. So some things I'm doing differently now than what I did before. One, I am paying a lot more attention. I'm learning how to read these candlesticks through a great book. I forgot what it's called. Japanese candlesticks or something like that. I'm using some other things that I've learned, like the 50% line here. And here's the other 50% line because it didn't come up here, but it was still effective to get short through here. And then we used the trend lines that I drew. And, you saw, how pretty effective they are. And I drew those on the 1-minute chart. So, once again, they're through here, I think. I don't know, I can't remember. Whatever. Draw them on the 1-minute chart. You'll thank me. Anyway, that's it. If you have any questions, feel free to email me and ask me. Check out that video by David Modell, and you can see the YouTube. I wouldn't say it's a link. It's not a link, but you can see where to look it up on on this video, explaining that open gap strategy by David Modell. Anyway, so that's it. That's all I got. Hope it makes sense. Hope it wasn't too long. Oh, let's go back. Let's go to here. This is actually very important here. That trade is huge. If you look at, okay, we'll just take, oh my God. Now, if you traded with options, you could easily made 100%, 200% on your options. These are ones that are going to expire 2 days from now. If you got in at 292.50s, because it was at almost 293. If you bought the 292.50s, they would have been, pretty inexpensive. And let's say if you're here, let's see what's the price here. Price is, 291.73. You get in at 62, and then it goes down a point and a half. That's going to be 100% right there. point and a half of delta is, you know, 45, 22, 67 cents. So it'd be over 100% right here. So a point and a half move, and you could have made that, you know, pretty easily. It would be cheap. It would have been much cheaper if you would have bought the options that expired today. If you bought the options that expired today at 292, it would have been, I don't know, probably would have been half the price of what it is today. So if you look at 292.50, whoops, that's the wrong one. I bet you would have been half the price. These probably would have been about 30, 31 cents. And then these still would have been, you know, the delta still would have been pretty high on these, I think. But anyway, that's how you can make a lot of money trading the SPY using open gap. You don't need a lot of money to make a lot of money to hit 100% return here. Okay, if you don't understand this, oh man, I'm gonna have to maybe do another video on options and delta and things like that. But just trust me, you could have turned this, you know, if it would just went down 1 point, and you bought them at 62, you could have sold them back at, you know, 112, you know, sometime during that day. So that's 100%, just about. Anyway, we'll talk to you later. Bye.